Hi everyone, what a day today. We continued this sell-off here, breaking through that trend on a closing basis, went right to the next level at 550, tried to retest the levels, and we're looking at it here after hours. Is it going to reject from here and push to the next one, 544? But let's take a look at all of the charts and see if we can find any changes in continuation, or is it going to be continuation down and to the right? Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. Looking at news today, we got Trump coming out and saying he is doubling down on his tariff plan, saying he does not care if stocks sink. We talked about this before, but he came out and reiterated it. He's not going to bend at all in his statement to the NATO secretary. And despite the fact that the S&Ps have fallen 10% from their most recent high, entering a correction territory. Correction's not a huge thing. It does happen on a fairly regular basis, but this seems pretty clearly off the back of the current political policy around tariffs and the uncertainty about what those could frame for markets over the next couple years, at least until he is done with his term, in my opinion. And arguably on this news, you can see it, he is potentially escalating his plan for more tariffs. We had the threat of a 200% tariff on spirits coming out of France. That's by far the highest that we've seen. We could also see reciprocal tariffs on all of these other countries, putting up trade barriers on U.S. stocks. So this is a full-blown trade war, and there's a good chance that markets are going to continue to go lower as we continue to see this rhetoric. And you can see that 200% tariff on alcohol exports, including wine and champagne. And that would be a major hit, obviously, specifically to France. Moving over to fear and greed, we stepped right back down to a 15. Absolutely terrible as we see this selling continue here. You can see we're down into the 5,500 area. Prices that we saw back here in August of last year, prices have declined. You can see a pretty substantial move here from October of 24 to current. This is about as low as it goes. You could argue that this would be a good turning point if this wasn't being driven by fundamentals, which it absolutely is in my opinion. You can see strength, breadth, everything continuing to be in extreme fear. Put call ratio resuming its rally. Volatility continues to pull back. I'm not sure if that's accurate. We'll take a look at the VIX later. But safe haven demand absolutely cratering, down 11.62%. Hopefully you've been owning bonds like we've been talking about. Bonds have held up significantly better since really October of last year, and then junk bonds finally moving into neutral here. This was the last holdout sitting in greed, but now it has moved back into neutral. Quick reminder on seasonality, the low of the month in normal years is the 17th, so we're continuing to see this fall towards the 17th. Obviously, we've gone a lot lower than the average of 1.5%, but that is the day that we're supposed to see market lows for March. Is it going to happen? Is that going to be the low and then we rally out? Obviously, that remains to be seen. Moving over to the economic calendar, you can see PPI coming in better than expectation, minus 0.1 versus the 3 expectation for forecast. So inflation coming in quite a lot. I wonder if we're going to get a potential cut earlier in the summer than was previously forecasted. Want to see the FOMC mention these really soft inflation data numbers. Interesting to see this fall off a cliff. You can see the previous number was revised up a little bit, but the expectation was 0.3. We got flat for the month over month, and then the core number expectation was also 0.3, and we actually got deflation on that number. So really interesting moves on inflation. Want to see what the Michigan data says tomorrow. Is that going to continue on this soft inflation trend? And then consumer sentiment to round out the Friday. Definitely interested in that as well. Moving over to Max Pain. Max Pain has moved a lot here. You can see put walls at 540, lots of them there. Not expecting to get anywhere near that to close out the week. Total options 1.5 million. Definitely going to be interesting as we get into the quad witching next week, but max pain right now, 570. Can we get anywhere near that? Seems unlikely at this point, but are we going to get below 555? Also seems unlikely. So probably stuck between 555 and 570, which is still a pretty wide range heading into the Friday, but either way, I don't think we're going to go much lower than potentially 1% tomorrow. Moving over to the charts, looking at the S&Ps, looks like the falling knife continues to fall here, down 1.33%, closing below that trend line. We got a couple of bounces from it, and now we are back below it at the close, and then after hours, we're getting a little bit of a bounce, but not a whole lot. We'll look at that in a second. Right now, The support is 550.12. We touched that level and found a little bit of support. Again, not super strong. You can see we're back into the price action from here in September of 24. Really, we got here in July of 24, so we've round tripped a lot of this move. If we fully round trip here, that's going to take us potentially into the 536 to 540 area. That's in play. You can see the highly traded zone right in that same area. That could be the area where we start to see a little bit more support coming in. In terms of RSI, we're at a 28.18, so oversold conditions. Again, that doesn't tend to matter as much when we have economic fundamentals that are driving this sell-off, in my opinion. This doesn't feel technical. This feels like fundamentals out of the political environment that we're seeing. And then looking at that hourly chart here, you can see sold off immediately back below the 21 in the pre-market. We saw the after hours yesterday. It looked a little bit stronger with the low, higher low, but it turns out we ended up getting the lower low in the mid-session today. You can see that critical level, 550. If you traded from there, hopefully you took profits into the close, because right now 554.87 is your resistance, and I would guess that this continues to waterfall sell here with that 21 EMA being a good zone of resistance. And really, we have not held above that 55 EMA for any length of time. We got above it slightly here in mid-February for basically a pre-market session and then immediately sold back below it. So right now, that is your resistance. You can see we touched it briefly on the 12th and then immediately sold lower. So we'll see. Everything continues to point lower in my opinion though. Then moving over here to the Tasty charts on the hourly, you can see we're back into bearish conditions here after that 10 o'clock candle. Current ATR resistance is 562.01. Didn't quite hit that lowest ATR band. Interesting. Same as what we saw here. So the selling pressure might be letting up just a little. We did see it here where we just missed it, retraced pretty substantially and then went lower. Maybe we get a nice little retracement up into that 55 area around 558.60 in that 55 EMA area. That would be interesting. But looking at that daily chart, you can see still super overextended, well below those ATR bands. And then I wanted to highlight that weekly chart almost to that lowest ATR band. Now, if we did get into that lowest ATR band around the 541 area, that has got to be a short-term bottom, in my opinion. We've had 4 weeks of straight selling. We're still at the low of the candle. Looks very aggressive. This looks even worse here than the July into August sell-off. Obviously, that low candle ended up reversing into the rally here, but right now, 541.19 is that lowest ATR band, which in the short term is in range, and it almost looks like a target. Throw a wick to that level at the end of tomorrow's session and then catch a bounce into the early parts of next week potentially. That would be interesting, especially with Max Payne coming up. It's another scenario that could potentially happen. Moving over to the NASDAQ was even worse, down 1.8%, right back to the lows of the Monday and Tuesday sessions. The level is 468.05. We overthrew it briefly. You can see it here on the hourly, but then we did bounce back above it, and we are right at that trend line now in the after hours session. We did get a little bit of a rally just like we saw the previous session, but that did not last long, and we ended up continuing selling there. So not great. Closed below the trend, closed right on the lows of those candles. If it's going to go, it's probably going to get more continuation tomorrow, in my opinion. And if we do start to round trip this move the same way we saw on the SPY charts, that would take us into the 450 area. That would be another $18 of potential selling. We're already oversold at a 29.4. Is it an opportunity to buy? I would say so. But at this point, you are still catching a falling knife. You really don't have the kind of structure that you would want to see if you were to be buying in this area. In terms of price action, you can see it did hold up a little bit better in terms of structure. Wicked that same low from the Tuesday, Wednesday. Ended up inside of those candles, but below the trend. If it rejects from there, continuation lower. Could see a push into that 464.50 area. That's my next level if that 468 area breaks. Moving over to the Tasty charts here for the Qs, you can see that big selling action on the weekly. The lowest ATR band here is right now at 451.93. That's pretty much in line with what we were talking about, that 450 area. That 89 EMA here on the weekly chart would take you to 451.61. Right here seems to be the target. Does it happen this week? Probably not. It's a little bit out of range, in my opinion, for one day of trading, but it could absolutely happen. If we see the structure that we're in break, we do see another 2% style move. We would still come up a little bit short, but then we would be in striking range for the early part of next week. We did see $8 here today. If we saw another $8, that would take us to 460 and then absolutely in range of that target. Everything else here is still super oversold, just like we saw on the SPY charts, well below all the ATR bands on the daily. And then looking at that hourly, we were never in bullish conditions on the Qs chart. The SPY chart did get bullish just for a second and then gave it all back here today, continuing to look bearish. Your resistance being that 89 EMA here on the hourly chart, which is currently at 478.18. Moving over to the Russell and the Dow, these both look terrible, 1.49 and 1.25% respectively. The Russell broke this trend line. That was an important trend line, and it now has broken. We also closed below my next level at 198.75. Super oversold at a 23.29, but again, this is a fundamental move. Absolutely still a falling knife. My next level is 195.15. In terms of structure, we're kind of already at the lows here from June of 24. Your next consolidation low is really down here at 191.89. That's what I would be looking for if this current zone breaks, which it looks like it might. After hours, it's up about $1, but not much. And the close on today's candle was absolutely not what you would want to see if you're looking for a bullish move. And then looking at the Dow, coming off of this really clear double top, we've been talking about this. It's probably got quite a bit to go. Looking at those kind of next areas for lows, the next level for me that I think we're going to go to, I think 404 should break, and I think there might be some support in that 398.76 area. You can see the gap here. You can see the wick to that zone before we got the continuation. I think there's going to be some potential buyers in there. We're pretty solidly off of the highs, not as bad as everything else when it comes to price, but the Dow is 9% off or so. Pretty solid move for the less volatile index. Moving over to the Mag 7, the Mag 7 sold almost 3%. The level here is 265.08. We got back above 273 just for a moment yesterday, and then today we sold back below it. We do have kind of a consolidation low. You got the consolidation high back here in August, but probably going to go. The next low here would be around 252, my level 249. We'll see if that zone ends up holding, but realistically, I think we're probably going to cut through here. Moving over to the SPY divided by the M2 money supply. I don't talk about this chart very often. I usually hit it only on weekends, but I want to highlight the fact that we are through this 25.91 level, very important level. The next one here is going to be 24.49. That is going to take us all the way back to the lows here from August. Momentum bearish, RSI bearish. It's not oversold yet on this chart. It's not quite there yet, so you have a little bit more selling. Realistically, this could go as low as the 2205 level. This is what we saw on the pre-COVID high here, the high right after COVID before we had the selling in 2022, 2023 timeframe. Had a brief touch of this zone July of 23 before we had a couple of weeks of selling after that. And if this retraces into that zone, that's going to be another 13, almost 14% lower from current price. So I certainly don't think we're done. Even if we do catch a bounce, I think we'll get a lower high, continuation lower. I think ultimately we're probably headed to this 200 around that 2205 area. Moving over to Apple and Microsoft. Look at Apple. Absolutely insane. Down 3.36%. Waterfall sell-off over the last 4 days. Almost 5%. Cut through that zone. Cut through this one. Cut through to 11 here today. We're through the lows back here. At this point, you have to assume that we could absolutely head into this 196, 199 area, somewhere in this consolidation range. You still have 207 in there. Could hold that level, but I just don't see it. Not with the way this is continuing to sell. It is oversold now. That's interesting, but again, this is kind of fundamentals. Apple definitely going to be impacted by those China tariffs. And then looking at Microsoft, 1.17%, actually outperforming quite a bit today. It is bouncing a little bit off of that 378 level. It's the same one we've been watching over the last 4 days. Continues to hold. Is it going to bounce from there and push back to 388? Maybe. Is it going to change structure? Seems unlikely. Moving over to Tesla and NVDA. Tesla sold off almost 3%, right to the support at 232.57. Low of day was 232.60, so we missed it by 3 pennies. We'll call it a touch. Is that support? For now, it seems like it might be. Finished in the middle of the candle. Not super strong selling. You can see momentum stepping to bullish just slightly. Not a whole lot, though. I would be very, very cautious. Again, 232.57 is your support. You have a little bit of risk there. Your upside would be 255, at least in the short term, and then you got NVDA. 116.70 was the resistance. We touched it yesterday. We touched it again today. Rejected from there. So that's your overhead resistance. If it breaks, you're looking for a move here to 132.74. If it continues to close below it, we're looking for a push back down to 106.64. Quick look at Meta and Broadcom. Meta was down 4.67%. This has been a really big move. So you had 19 days in a row, 20 days in a row of bullish. We've fully round tripped that move back to this consolidation low. Is that going to break? Is it going to go to the 200 there at 569.57? My level 564.51. Huge selling. You have to assume it's going to continue lower, at least in the short term. Huge top. Couldn't hold any of the gains. Big sells. And then looking at Broadcom, big outperformer here today. Broadcom was only down 1.48%, still holding in the same trading zone we were in, 184.81 up to 196.23. We'll see if this zone continues to hold, or is it going to break this zone and push back down to 175, or potentially as low as 158. That would round trip this move here, taking you back to those lows. Moving over to staples and discretionaries, more everything selling. Absolutely not what you want to see. Down 0.5% on staples, still holding up a little bit better. Discretionaries 2.5%. Fully round trip this move back to the October of 24 area. Gave all of this back. Now we've broken structure here at 193. We were almost in that zone yesterday. We broke it. We're headed down to 189.38. You have a consolidation range back here around 185. Is it going to go there? Seems likely with how aggressive the selling was here today. Moving over to real estate and utilities. Real estate falling off a cliff, but it is back into this nice little buying range here between 39 and 40, almost 41 in this kind of trading range there. I think this is an opportunity. Could it still go lower than that? Absolutely. You can see back here to June of 24, we were down between 37 and 38. Might want to be patient just a little bit with this big selling candle here today, but we are off of these relative highs. We said it was expensive above 42, and it was. Back into a potential buying range there. And then utilities, the only sector that was positive on the day. You can see it's held up pretty well. Still had some selling off of the most recent high. You're about almost 4% down to the lows, almost 6%, but relative to everything else, really consolidative, still holding that 200 as support at the 76.31 level. Moving over to breadth, we said we were concerned about breadth and why we might see continued selling yesterday, and sure enough, we did get continued selling, and breadth has not improved whatsoever. 20-day breadth still in this 16 area, 50-day breaking below the 26.39 area, potentially headed to 22, maybe as low as 15. That would be interesting. That was the low last time. Had this on the chart for a long time. This was the low all the way back here in March of 23. That was an important level. We can absolutely go lower than that, but that is usually pretty close to the lows once you get into this range here between 15 and 10, and that's almost where we're going. In my opinion, I think we'll get at least to 22, potentially into that 15 area. Not quite there yet. Looks like we're going to get a little bit more selling. Moving over to bonds. Bonds continue to sell here on J&K. Very, very interesting. Down another 0.5% right to the level. 94.82. We said that's probably where we were going once we broke below here. Did find a bounce just for a second and then continuation lower now. So we're not out of the range we've been in, but structurally this doesn't look super great, right? So you have a high, kind of lower high, kind of consolidation, had a low. Now we're at that low. Is it going to hold or not? If this starts to break down, that could be very concerning. The next level would be around 93.64. Momentum bearish, RSI bearish. Super oversold at a 29.48 on the RSI, but huge volume coming through on that selling. Seems like people are trying to get out of some of these higher yielding bond assets. And then looking at TLT, TLT still finding buyers, right? We didn't even get to the level 89.16, up almost 1%. Buyers in here. This almost looks like a bull flag with a nice push up. Bull flag type setup. Is it going to break out of here and push? Could be an interesting opportunity. Seems like government bonds are the place to be, and they've been holding up really, really well. Moving over to the VIX. The VIX continues to fade on momentum. It was positive on the day, just barely. It's still holding right at that 9 EMA, still right at this kind of consolidation top. But momentum fading, RSI fading. Is it going to slow down here soon? Potentially. Can we get one more wick to those levels we talked about and then find some support? Absolutely. Does that take us back into the 20 area? I'm not sure we get there in one day, but I would like to see it at least pull back into this zone, and then we'll see what happens from there. Do we find support and then push back up? or is it going to cut through here and head back into a more normalized range in that 15 to 16 area? Moving over to my accounts, I did exactly what I wanted to here today. Made just a few dollars on a big down day. You can see the SPY being down 1 1/3%, but I was positive, just a couple of dollars. So that's the goal. I made money yesterday on the up day, kept all of that money on the down day today. So that's what I've been trying to do, and that's what I did. So nice results here over the last 2 days. I didn't make as much money as I could have yesterday or really today, but either way, that's what you want to see. Was able to keep the gains from yesterday and stay just slightly positive today. In terms of positions, obviously I have none. I still think we're going to continue to go lower. I don't really like being short overnight. You can absolutely see those spikes up, but I do think we'll get a nice opportunity to sell some calls during the session tomorrow. Let me know down in the comment section what you think of Trump's comments here today, his new threats on new tariffs, his comments towards NATO. Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a